This is the WealthNet Market Call of the Week, highlighting investment trends that could affect your wealth. Globally aware with a geopolitical and quantitative perspective.
Hello, this is Llanes, and this is the Market Call of the Week. Today I'm going to be talking about fact versus opinion. When I was young and I was in college, there was a professor that I had in communication that really impacted me. This particular professor, what he did was he made us do an assignment, the very first assignment, and it was a really easy assignment. He said, listen, you can pick up any newspaper you want, and you have to read it from cover to cover for an entire week. And what I want you to do is I want you to underline only those things that are facts, only those sentences that have facts that are substantiated by data or substantiated by some reliable source. And it was a really interesting exercise. I chose the Wall Street Journal, and I went through the entire week. I read it from cover to cover, each one, and I highlighted only those that were facts. And what was I was astonished because there was only less than 20% of the entire newspaper was really facts. And what that really highlighted to me was that there is very little fact in newspapers and in the news in general, and most of it, in fact, is actually opinion or fluff. And that was the biggest thing that I learned. The second biggest thing that I learned was that there are each individual author is connecting dots and coming up with a conclusion. But you yourself could come up with your own conclusions that may be different from what the newspaper articles are saying or what the news on the television is saying if you just highlight the facts and then you connect your own dots. So one of the things that I find to be extremely helpful in investment management when it comes to news is to be that person who just highlights the facts and then tries to connect your own dots and really listen to what other people's opinions are, but don't necessarily make that as being the gospel truth. Actually look at the facts and connect your own dots and come up with your own conclusions. So that's the first thing when it comes to news. And the reason why I'm bringing up this whole news thing is because in the last, I would say, 2 or 3 weeks, and really throughout my career, there's been a kind of a camp of people that say, hey, don't ever listen to the news. Don't read the newspapers. They're worthless. Don't listen to CNBC. It's worthless. And I would say for the most part, that is absolutely 100% true. There is, however, a couple of caveats that I would bring up to light. The first is that there is a tremendous amount of information inside the news from a sentiment perspective, meaning that we can actually get a good feel for what the prevailing bias is, what market participants are thinking, and get in the mind of the market and watch the movements of the prices themselves. And if you see a variance between what the sentiment is and what the prices are doing, you have a potential setup for a trend change that could be significant. So for that reason, that's one reason why I listen to the news, because you can actually see these setups occurring and you can see these divergences between what the actual hard prices are telling you and versus what the news is saying and what the prevailing opinion is. One recent kind of example of that would be the Bitcoin craze. When we saw that exponential move up, the prevailing bias was that the whole blockchain and Bitcoin was going to change the world and it was going to happen very rapidly, and there was massive buying. And then we saw a break in the trend, but if you listen to the news, there was still a lot of people out there saying the same stories, but the price was saying the other thing. And saying that it was going to go down. We had a complete trend break and all technical indicators were flashing get out. And that was a very good sell signal because, we saw that prevailing bias quickly change and we saw a 50% plus drop in Bitcoin. That's just one example. I could go through many examples throughout my career, but that's one thing I want to talk about in terms of the news. So the other thing I wanted to mention about news is that news is also valued from the standpoint of helping you just get a feel for what the sentiment is in a particular item and if it's gone too far. So let's say sentiment has gone so far to the negative side that you have a situation where everybody thinks it's a bad idea to own something. A lot of times, if you do your homework, you can look in that group and you can find investments that make sense from a longer term perspective. And I want to actually kind of go in and mention that in the field of China right now and emerging markets, because we have this prevailing bias right now that nobody wants to own international and nobody wants to own emerging markets. Not too long ago, I had a phone call with a new client that was coming in, and we were looking at their entire portfolio, substantial portfolio, high net worth client. And this particular client had virtually no international exposure. And the conversation, went kind of like, well, it hasn't been the place to be. And in fact, that client was 100% correct. It was not the place to be, and it hasn't been the place to be for quite a while. Now, if you've been watching or listening to my other market calls, you heard me talk about how emerging markets have peaked a long time ago, and for that reason, there was potentially some value, or there was a value setup, but we needed to see some stability. So now that is true from a general market perspective. From an investment management perspective, I believe that savvy investors can look inside the group and find opportunities to start nibbling now. And what I want to talk a little bit about is a company called China Telecom, who is the largest fixed line operator in China. They cover 21 southern provinces. They have about 120 million fixed line subscribers, 141 million broadband customers, 282 million wireless subscribers. The firm is increasing its cross-selling across the product lines, and they're adding additional services such as cloud computing. Now, why do I bring this particular company up? I bring them up because they are trading at multiples that are substantially lower than what we would see in other investments. Their multiples they have an earnings yield of around 7%, whereas the general market earning yields is substantially lower than that. They're growing at about 9% according to what analysts are kind of estimating, whereas other firms are growing at a slower rate and have multiples that are not as attractive. And the other thing that I want to look at here is that the stock itself has been basing for a long period of time. So what I want to talk about and look at is the chart now. The chart here that I'm showing is a very long-term chart, and you can see this is a monthly chart going back all the way to 2003, all the way up to the present. And if you look at that chart, you see this very long-term support area at $41 to $42 a share. It really got established in a peak in 2003. It's been tested multiple times. There's been a lot of support and buying at that range. Now, the stock itself, the company shares, this is an American Depository Receipt, an ADR or international stock that is traded on the New York Stock Exchange. So for U.S. investors, it's denominated in U.S. dollars, just as a sidebar. So anyhow, this particular stock peaked out way in the 90s and now is trading at around $48 a share. So, and it had a couple of major peaks, one at 68, one at 78. And since the most recent peak that we saw, a major peak in 2005 at around $78 a share, if you look at the volume weighted average price of the trading from that peak till now, you can see that we're testing that upper end of that range. And the stock is oversold from a very long-term perspective when you look at this environment of skepticism in the emerging markets. This indicator on the bottom is a Chaikin money flow indicator, which is just basically an indicator that looks at money moving in and out of an instrument. So clearly this stock is oversold. Clearly it's down and it's at support. Okay, any technician can see that. Now, when we kind of go up and we look at the valuations, this is the thing that I want to really stress, is that they have a competitive valuation compared to the industry and their top competitors. They have large cash flow. China Telecom is the largest fixed line telecom operator in China. So their fixed line business generates significant cash flow that can be used to invest in its broadband and wireless networks. And they have that competitive growth. The firm has increased its wireless base by more than 6 times since it's acquired the business in 2008. And this growth was much faster than that of the other two competitors. We also have this backdrop of sentiment where we have pessimism in Chinese stocks, concern about the dollar possibly, being overblown. So I believe that over time, a long-term investor can pick up these types of companies now, even though maybe the whole sector or whole country, I should say, or asset class in emerging markets is not bottomed yet. This is where you can find some fertile ground for opportunity. Now, there are some risks obviously involved with this. China Telecom is controlled by the Chinese government, and their objectives may or may not be aligned with those of the minority shareholders. And their competitors are marketing very aggressively, and they have more scale. And obviously, we have emerging market risks with currency and tariffs. So this is not without risk. But if you take a good position size, and that's how a portfolio manager like ourselves will be looking at this, is taking a reasonable position size, considering those risks, there could be opportunity there. Now, I want to point out this other chart here. This chart shows China Telecom on the top, and then we have one of their biggest competitors, China Mobile, in the middle chart. And that bottom chart shows the relative comparison of the performance between China Telecom and China Mobile. So when that line is moving higher, China Telecom, the company I'm talking about right now, is outperforming China Mobile, its larger competitor. And you can see since July, we've seen that steady increase in outperformance there. So even though they don't have the scale, I think the market participants are showing indications that they're stealth buying for a couple reasons. One, the relative performance is better than their top competitors since July. And two, we've had a significant support level that has been tested multiple times between $41, $42 a share. And that would indicate potential for stealth buying. So I want to talk a little bit about kind of where this company could go. So if we look at it from a cash flow perspective, we've seen estimates from analysts that the fair value of that company could be as high as $82 a share. With the stock trading around where it is right now, if we have a confirmation bullish move up, the stock would break above 51, which would be, right around the volume weighted average price there from that peak that I was talking about. If we saw that, that could be a reasonable entry. That could be a confirmation for those who want to wait for a confirmation that maybe the bottom is occurring. Obviously, there's no perfect knowledge that it is occurring, but we might have a higher indication that that's happening. So if that is the case, the stock could have potential upside of about $31 a share. And if you look at the volatility of the instrument, and if you look at a trend change, like where the stock price would need to go for a trend change, you're looking for a downside risk of around $38 to, it's $13 per share down to 38. So that's a reasonably good return risk profile. So this is the kind of thing that I think investors can do within the context of a diversified portfolio. If you look at the relative strength of this stock compared to the S&P 500, on the bottom part of this chart, you see that the downtrend, in performance is starting to slow now. So we've seen, it's just gradually slowing. So we're still early in the process. This is not a completed base. This would be a anticipation type trade where you're looking to be a little bit ahead of it. So taking a smaller position size would make more sense. So just summarizing this trade, we have the setup. We have this, pessimism in the emerging markets. The valuation is relatively attractive. It looks like there's quiet accumulation that's possible that's happening. So I would look at entering this stock between $46 and $51 a share as a trade idea. Downside risk is about $13 to $38. Upside opportunity is to 82. That's a reward risk of 2.38. And I think this is for a long-term investor who has a time frame of 12 months or much, much more. This is the kind of thing I think that investors can be doing in this space rather than just trying to buy an ETF and owning the entire market in the emerging market area. All right, this is Llanes with WealthNet Investments. Happy to be with you today. I wish you all happy trading and investing.
If you like this information, be sure to subscribe and follow us on Twitter and Facebook. The market calls are designed for informational purposes and should not be considered investment advice. As always, do your homework, assess the risk, and invest in light of your personal goals.